How do you get people to invest in China? There is this buyer's strike. What is going to take? Because, I mean, it's compelling on so many levels, the whole, from valuations to growth prospects in the future, but foreign investors just not biting properly.
Well, right now, we think many investors are treating China as a tactical trade because even though there are not a lot of attractive signal coming out to support the economy, right now it is more like a show-me story. Investors want to see the economic data improving and more concrete measures coming out. So investors are still hesitant to deploy long-term money into the market. But on an index level, we think it will still be relatively choppy. However, we do see structural opportunities coming out from different sectors. For example, high-end manufacturing, industrial upgrade, and the sectors China has competitive advantage with. So we think the trading strategy here is to be selective and to focus on structural opportunities.
So, Jasmine, the thing is, we've also, of course, got a market which, in the US at least, is teetering a little bit. Where are you seeing the money going? We've got this degrossing taking place with shorts and longs perhaps being just a little bit truncated. So are we seeing money flow into this part of the world?
Well, in Asian market, we think there are some areas that are relatively attractive to investors, and Japan market is one of it because it continued to benefit from the inbound tourists, and also domestic spending is holding up, as well as the companies are conducting some structural reforms. So on this side of the world in Asia, Japan market looks quite interesting to investors. And as for China, investors will look for trading opportunities.
Exactly. So, are you looking at the bond market in particular here as well? Because, people are positive on this, given the juice you're getting. And does that mean that high yield is attractive, or is it just to play it safe and keep on with the investment grade theme?
On the fixed income side, we will still remain defensive and to focus on quality, because we think if the U.S. economy is going to enter a soft landing next end of this year or early next year, it will be still relatively safe to hold the investment grade compared to the high yield bonds. So holding up quality is the key here.
All right, with that in mind as well, where, geographically, and what jurisdictions do you look at, and where are you the most positive in looking at industry groups while we're at it?
Well, at RBC Wealth Management, right now we are neutral on equities, but we have an overweight on Japan due to the attractive earnings growth outlook and also corporate governance improvement. And then we treat China as a tactical trade opportunity. And in the U.S., we also have a neutral weight, even though the stock market has performed relatively well this year, but we think valuation has gone up quite high, and summer season is relatively quiet, so we may see some pullback on the U.S. equities.